Dhananjay Sinha, co-head of institutional research at Emkay Global. Dhananjay, good afternoon. Thanks for joining us on the show. How are you assessing the market fundamentals right now? The broader indices may have cooled off despite a taper which is almost was talked about in terms of amount, but broader markets are doing exceptionally well in trade today. How are you really looking at the overall situation as far as the macro and fundamentals are concerned?
Yeah, I think the market has taken the announcement of the QE tapering on its stride, and if you look at the global markets, there seemed to, when the tapering was announced, the market actually went up after a small blip down. So I think what seemed to be happening is that the earlier events around tapering was that the Fed was actually differing earlier on with respect to tapering announcement, etc. So I think a lot of seasoning had happened ahead of the latest announcement on tapering that happened yesterday. So I think there seemed to be a relief rally after the event is out. So I think that's how the market has reacted, and I think global markets also have taken cue from that. But I think the key thing is to really understand what the tapering means for global liquidity, and I think that sense will actually seep in over a period of time. It will be important to see how Fed progresses this tapering over the next 12 months. Important thing to notice will be what happens to the U.S. labor market and what happens to the unit labor cost over there. If it actually the job market data actually strengthens, then I think the pace of tapering could remain on the higher side. So it is possible that before the end of 12 months from now, the QE might actually end. So I think that is something that will need to be assessed going forward. My sense is that as the phenomenon gets absorbed by the market, it is possible that the global excess liquidity will be lesser, and hence that will impact the market. But the tapering itself will reinforce the strength in the U.S. economy, which means that sectors dependent on the U.S. economy will actually do well. So my sense is that companies who have larger exposure to exports can actually do well. Companies who have external markets, especially in the US, might actually get re-rated. So there are two parts to it. One is the fact that there will be a positive spillover onto export-oriented companies, and there will be some negative spillover with respect to the global excess liquidity. Yeah.
Dhananjay, if we talk about the RBI policy, and although it might not have been explicitly said, but there was a mention from the RBI governor that policy action could happen on those days which are not on the exact date of the RBI credit policy. Could we take that to mean that we can anticipate a 50 bps rate hike going forward?
Yeah, I think two things are very important with respect to the RBI action. One is that the inflation numbers have been fairly high and higher than what RBI expected six months back or 12 months back. So I think there will be a upward revision in the final inflation numbers. So that is one side of it, and the other part is how the tapering will impact currency markets and flows. So if the inflation numbers remain high, and if the flows external flows actually weaken over a period of time as the market starts understanding the implication of the tapering, I think there is a possibility that RBI will have to increase rates. Our view is that over the next 6 months there should be about 50 basis point hike. That's how I look at it. I think the things that can actually impact the interest rate actions by RBI and something that can reduce the possibility of rates is if the government decides to reduce spending considerably, and that eases the pressure in the market. But I think that is conditional to what the government of India does with respect to its fiscal management, etc. But I think at the current juncture, the important variables that one should really look at is what happens to global liquidity, currencies, and hence the response on RBI regarding that. and what happens to inflation. I think these two things are very important in the current context. So we think that there is a possibility of a 50 basis point hike over the next 6 months, but I suppose RBI will not do a 50 basis point hike at one go. So I think it will try to try to maintain a calibrated approach wherein it does 25 basis point hike whenever it is necessary.
All right, Dhananjay, we'll definitely keep an eye on that. Thanks a lot for joining us on the show today.